Hello, everyone. Today, we are going to dive into the fascinating situation regarding central bank gold demand, a crucial factor behind the incredible rise in gold prices this year. In the first half of 2023, central banks bought a record 483 tons of gold. However, a surprising fact is that 67% of these purchases remain unreported. This raises an important question. Who is buying all this gold? One of the main candidates for these unreported purchases is Saudi Arabia. According to precious metals analyst Jan Nieuwenhuij, Saudi Arabia has accumulated approximately 160 tons of gold since 2022. This increase in gold imports is notable, as the country has traditionally been price-sensitive regarding gold. During cycles of high prices, Saudi Arabia would often see a decrease in its gold imports or even an increase in gold exports. However, since 2022, Saudi gold imports have been on the rise. Nieuwenhuij suggests that this may be linked to the West's decision to immobilize Russia's dollar assets following its invasion of Ukraine. This has led other countries with diplomatic disagreements with the West to exchange their dollars for physical gold. Saudi Arabia is the latest country to join this trend, alongside China and Thailand. In a recent interview with Kiko News, Nieuwenhuij commented that it is not surprising that Saudi Arabia is keeping its gold holdings quiet, as it remains an ally of the United States. The country would not want the gold price to rise too much, as this would mean that they would get less bang for their buck in future gold purchases. This reflects a broader strategy among nations seeking to diversify their reserves and reduce their dependence on the US dollar. Since China began its own gold buying spree in November 2021, the Chinese government has been sending a signal to the US and other Western nations that the dollar may be losing its status as the world's reserve currency. Political analysts have pointed out that the geopolitical situation has created a clear divide between allies and opponents, with Saudi Arabia positioned in the middle. Historically, Saudi Arabia helped establish the petrodollar, transacting all its oil purchases in US dollars. This relationship has been mutually beneficial, but in recent years, that connection has begun to weaken. Saudi Arabia has become a member of the BRICS trading bloc, which includes Brazil, Russia, India, China, and South Africa. This move indicates a shift in the country's economic orientation. Despite the long-standing diplomatic relationship between Saudi Arabia and the United States, it is evident that the kingdom is seeking alternatives and diversifying its assets. Nieuwenhuij notes that while Saudi Arabia still invests in U.S. Treasury bonds, it is also accumulating gold. This suggests a dual strategy reflecting its desire to maintain a solid relationship with the West while exploring new opportunities to protect its assets. The process by which Saudi Arabia is acquiring gold in secret is also fascinating. Nieuwenhuij speculates that the country is working with bullion banks to facilitate its purchases. Central banks often buy gold in Switzerland and London, and these bullion banks are responsible for packing and shipping the gold to where the central banks want it. This means that although Saudi Arabia is buying gold, it does not necessarily show up in its official imports immediately. To better understand this phenomenon, Nieuwenhuij has subtracted Saudi consumer demand for gold from its net imports. By comparing the result with gross gold exports from Switzerland to Saudi Arabia, a strong correlation is observed since the second quarter of 2022, suggesting that the Saudi Arabian Monetary Authority, SAMA, has been quietly purchasing gold. However, there is some difficulty in verifying Nieuwenhuij's assumptions. Bullion banks typically ship gold in 1 kilogram bars, while central banks deal in larger 14 kilogram bars, which are recognized by the London Bullion Market Association. This raises questions about how exactly these transactions are carried out in secrecy. There are also precedents for central banks keeping their purchases secret. For instance, the last time the Saudi Arabian Monetary Authority updated its official gold reserves was in February 2008, when it increased its reserves by 180 tons to a total of 332 tons. It is clear that they did not buy all those 180 tons in a single month, indicating a more subtle pattern of accumulation. China is another country known for its secret gold hoarding. In April 2009, the People's Bank of China announced that it had purchased 454 tons of gold over a 6-year period. Again, in 2015, the central bank reported buying 604 tons of gold over a 3-year span. Although China stopped reporting its gold purchases earlier this year, many analysts speculate that the country has continued to acquire the precious metal. As competition for the dollar's supremacy as the world's reserve currency intensifies, it is not surprising that Saudi Arabia is keeping its gold holdings secret, given the prevailing economic uncertainty. New Van Huids also mentions the potential creation of a BRICS currency, although he believes it is unlikely to happen soon, given that BRICS nations do not have much in common with each other. In the long term, Saudi Arabia is expected to continue accumulating gold as a hedge against unknown economic events. New Van Huids argues that it is unlikely that the country is using gold to settle trade immediately. Rather, it is in the early stages of accumulating gold, anticipating that it will eventually become part of a new system that could undermine the dollar. This brings us to a key question. What are the broader implications of these secret gold purchases for the global financial system? As more nations like Saudi Arabia and China quietly accumulate gold, we could be witnessing a gradual shift away from the dominance of the US dollar as the world's reserve currency. If these trends continue, they may lead to significant changes in the structure of the global economy. For investors, this poses an intriguing opportunity. Gold has historically been a safe haven asset in times of uncertainty, and the actions of these nations suggest that they, too, are hedging against potential economic turmoil. As the global political landscape continues to shift, the value of gold may rise even further, especially if trust in the US dollar continues to wane. In conclusion, the growing demand for gold from central banks, particularly Saudi Arabia, raises important questions about the future of the gold market and the stability of the US dollar as the world's reserve currency. As more countries seek to accumulate gold to diversify their reserves and protect against economic uncertainty, we may be witnessing the beginning of a significant shift in the global financial balance of power. Looking ahead, the actions of countries like Saudi Arabia could have major implications for the global economy. If they continue to stockpile gold while quietly distancing themselves from the dollar, this could pave the way for a new monetary system that diminishes the dollar's dominance. The intricate dynamics of geopolitics, trade, and central bank strategies will play a crucial role in shaping the future of gold and currencies worldwide. As central banks continue their gold-buying spree, it's important to note the strategic timing. With global tensions, including trade wars, geopolitical instability, and economic slowdowns, gold provides a hedge against the uncertainty that could disrupt traditional financial markets. These purchases are not just about securing a valuable asset, but also about preparing for potential shifts in the global financial order. For investors and market watchers, staying informed about these developments is essential. Understanding the motivations behind central bank purchases of gold, particularly from nations like Saudi Arabia, can offer valuable insights into potential trends in the precious metals market. Don't forget to subscribe to our channel for more financial analysis and the latest updates on the gold market and other precious metals. Until next time.